So we've just went over, did you trade today? Why did you trade today? What's the real reasoning if you traded today? Think of it as think of it in terms of take a look inside your own mind, because obviously the first reason you wanted to trade is probably because you felt like you're missing out on something. Now the next thing is, if you traded during CPI, during the actual news event, this is a very beginner type thing to do. We've all done it. We've all thought, how can we get involved in this news spike? This is not something you want to do, because when you're trading CPI and FOMC in 1 hour, by the way, just a quick little reminder, you're not trading under certain conditions anymore, because the risk management, the risk of losing 1%, if you risk 1%, goes out the window. So it's not trading anymore. It's just straight up gambling, because you could blow your entire account if it does go wrong. Let's say I took a short here. I had my stop loss here. Now, if I got slipped too bad, and this might, of course, it depends on your broker, but if I got slipped too bad, I might have took a loss right here. And that would have been a huge hit. And not only to my account, but to my mental, to my psychology, it would have been a huge hit. So that's the first question to ask yourself. Did you trade today? Why did you trade today? And can you resist that urge to trade? Do you really need to trade every day? Do you have this feeling that you wake up and you just need to trade? If you have this feeling, then please take a week off. Take a week off, just focus on your psychology. Don't even try to trade. I didn't trade today, but not full-time trader yet. All right, that's perfect. Next thing I wanted to discuss. So today I wanted to talk about anger, and anger is a signal again, like we talked about with fear, like we talked about with greed. It's most of the time, it's some kind of signal. Anger is also a signal. Anger is not the problem in itself. There's something behind that anger. So there's some kind of pattern that worked ahead of that anger that made you angry. So it might have been a loss or something that made me angry eventually. But I don't all of a sudden get angry. There's some kind of pattern ahead of getting angry that needs to be found. We need to find that pattern. What makes you angry? Why are you angry? That's very important. And then the next thing is accumulated anger. So if you are angry and one day you just snap, like today I took a loss here, for example, and I just snapped. I absolutely snapped, and I just threw my laptop out of the window, for example, and I was just so angry. Then I sleep, and tomorrow I trade again. Now tomorrow, you might think tomorrow all my problems are gone. No. Those emotions, they stack up. Your anger is not gone. The next time something happens, you'll get angrier even quicker. So you'll get angry even quicker. And it only takes one little drawdown for you to get angry. So these emotions, they stack up. It's not just get angry and your emotions are gone. No, and this is where, again, the journaling, the pen and paper, where they come in, and venting in real life to someone and talking about it and getting it outside of your head. And not getting angry and then expecting it to all be okay afterwards. No, that's not how it goes. Yesterday we talked about fear, actually, and you might notice here today that anger is the exact opposite of fear. Now, fear can lead to anger, and anger can lead to fear. Like we talked about, all these errors are like they're correlating with each other, so they go hand in hand. One leads to the next thing. It's like one big cycle. The opposite of fear. What is the opposite of fear, if we ask ourselves? Well, fear. What is fear? Fear is just seeing this price action right now, and I see this price action right here, and I know I should execute it, but I'm second guessing myself. I'm just like, I'm not sure. What should I do? Oh man, I'm not sure. I'm fear on hesitating, and anger is just straight up hesitating, saying, fuck it, I'm going to execute everything right now. I don't care anymore if I blow my account. And with fear, you are somewhat thinking straight, but with anger, you're just taken over by the anger in itself. And afterwards, you'll be like, what went over me? What was I thinking? And this is, of course, this is the most dangerous probably, because anger will lead you to revenge trade, over trading, and getting angry at the market or anything else, getting angry at a loss, thinking you don't deserve that loss or I'm so unlucky. This is very dangerous thinking for a trader. So again, anger is the opposite of fear, and you do things without even thinking about it and without hesitating. Then the next thing that could lead you to anger is fixating or marrying a bias. For example, I am in right here, I think we should have went short. And all day long, yesterday and this day, I was just thinking price should go short here. Price should go short here. We should see bearish price action. And when I don't see that bearish price action, when price doesn't meet my expectation of that bearish price action, what will happen? Well, if I do have some kind of ego problem or some kind of confidence problem, I will take it personally. I will be like, why is this happening? Why is the market going against me? It should be like this. I'm just, as you can notice, I'm afraid to be wrong. And when you are afraid to be wrong, you will get to that angry stage. So again, this is that angry, when you do get to that angry stage, this is again a signal for you. It's not necessarily a problem, it's a signal that you need to solve something. And of course, the profiles, etc., the sheets will help with that. And everything, again, I've said it so many times now, also in the previous psychology reviews, but everything leads down to being aware of how you feel, being aware why you are doing something. It's being aware. If the only thing we can control are our thoughts, then we are completely useless if we don't even notice our thoughts or don't even notice why we are doing something. So it's very important to understand. Then the next thing that I wrote down, because obviously I have a list here that I just, a few things I want to go over just to make sure I touch on everything. We went over marrying a bias. Yes, no consideration. Exactly. When you're angry, you'll just not even consider anything. You'll just totally take a dumb trade, force a trade, or anything. And you won't even consider, for example, when we're bearish here, we won't even consider the higher time frame. We're just focusing on the lower time frame now, without hesitation, just taking every first market structure shift without looking at anything. And that's that can lead to anger. Then next thing, toxic thinking, making up stories. Now, I think, and these are very common issues because I recognize them as well. I recognized things that I did as well. I used to get so angry, and I used to not necessarily get really angry, but I used to think to myself, the market is just really against me. The market is always against me. Well, on our theory, this is somewhat true, but again, the market is not seeking you specifically. No. The market doesn't see your stop loss and thinks, yeah, we are going to hunt him or her. No, this is not what's happening. So making up these false stories will be detrimental to you. And this will put you in a negative cycle, etc. This will put you in a bad cycle where you have these false beliefs that are just not true. And trading will be very difficult if you believe the market is constantly going against you and the market has something against you. And making up these stories after a loss or anything, or saying, I'm unlucky, I'm always unlucky, I always lose. Making up these false stories, these false narratives, it's very, very dangerous as well. This can put you in an endless cycle where you just don't see any profitability, because in the end, you will start to believe the market is really going against you. And that's not something you want to believe, because it's generally just not true. Of course, B-book brokers, etc., the wrong brokers, they will go against you. They will have it out for you, but that's not something like this, because a B-book broker, when you have your stop loss, for example, right here, they will just wick you out. That's a different story. Then also, if you do make up these stories and you do notice yourself getting angry and you do notice yourself blaming other factors, just blaming the market, blaming this, blaming that, blaming other traders, blaming that, take some responsibility. It's you, and taking this responsibility, of course, if you're at your worst, at your C game, like we talked about, and you're performing at your absolute worst of your career, then taking that responsibility is tough. It's difficult. But when you're at your E game, or at your A game, sorry, then it's also your fault. So you see how it goes both ways. If you're doing bad, it's your fault. Not necessarily your fault, because if you're just executing your plan, then exactly, you get what I mean. But if you're doing great, then it's also your own doing. So it goes both ways, and taking responsibility is the first step. If you don't have responsibility and you're just blaming others constantly, then what's the point? And this goes with everything in life, of course. Taking responsibility in life, very important. False expectations can also lead you to get angry. So a false expectation, for example, is what we talked about in the beginning. Do you feel the urge to trade today? Why do you feel that urge? Is there a belief inside your mind that you think you should trade every day, or do you think there are great opportunities every day? Let me tell you, there isn't a great opportunity every single day. There just isn't. There will be a day where price action is shitty, or you are feeling shitty. There just isn't going to be a great trade every day. Having this false expectation and then completely being convinced of this expectation, that will lead you to get angry, because that expectation will not get met. So that will make you angry. You're like, there should be a great trade every day. Why is there not a great trade every day? And you will get angry. You will start revenge trading, over trading. You might take losses, etc. Same cycle over and over and over. So false expectations, write them down as well. And same thing for the making up stories part. If you're making up stories, or you think something, or you think the market is against you, then please, again, write it down. Write it down what you're thinking and why you're thinking it. And then after a while, when you're a bit more calm and that anger is gone, you can look at the things you wrote down, because it's now outside of your head. And you'll probably look at them and think, I was just talking a lot of bullshit and I didn't mean this, etc. So write it down to see your emotions, see your thoughts. Next thing, obvious mistakes. Making obvious mistakes. And making obvious mistakes is a signal. It's not necessarily a problem. It's something, it's a signal that something went wrong, whether your top-down analysis went wrong or your emotions rose too high. Something is wrong. If you're making obvious mistakes, especially if you know of yourself, I shouldn't be making these mistakes and I never make these mistakes, then that's a signal again. It's telling you that something in your psychology might be a little bit messed up. And not messed up as in you're just totally messed up now. No, you might just have an off day, and your psychology, there might just be something. And mapping your pattern, finding the root using the sheets, that will identify the problem. So yeah, spotting the rising tide of the emotions. Self-criticism. Now, I've talked about this as well in the Zoom on Saturday. Self-criticism is a very, very dangerous thing. If you only talk negative about yourself, then don't expect any great things. Don't don't expect to be great at something. Of course, some self-criticism and some not necessarily self-criticism, but having this thought of, okay, I can do better. I know I can do better. This just wasn't my day. I can do better. That's, of course, that's good, but don't get caught up in it. Don't stay like, I'm an idiot. I was so dumb. How do I keep making these dumb mistakes? I'm an idiot, blah, 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 blah. This self-criticism and just almost self-hate, that will get you absolutely nowhere. Being positive is a very unique skill. Be that idiot that is positive in every situation. Be that idiot that can see in every little stupid mistake something positive. If you can see a little bit of positive in a stupid, huge mistake, and that's great. If you can be the person to see some kind of positivity in every mistake, then you are going to be amazing at what you do, no matter what you do. Then self-criticism, like we talked about, yes, always wanting to be right. This is also the false expectations, etc. And like we talked about in the beginning a little bit, always wanting to be right. Now, always wanting to be right will hurt you in the end. And this is also a bit dangerous, because if we truly think about it, if we truly think, and this again, not taking shots, I'm just explaining my thoughts and how I see the world, how I see things. But if we look at ICT and some students, etc., they always tell you the market is not random. The market is not this. You shouldn't react, you should only predict, because we know where price is going. If they tell you this, and then we think about again, always wanting to be right, or always wanting a reason behind things. This is a very dangerous thing, because if you're always wanting to be right, that might be a little bit of a confidence problem, where your confidence just can't take it if you're always wanting to be right. And if you're wrong, your confidence will take a huge hit and you'll feel like a failure, etc. You'll get into self-criticism and you'll just be in this endless cycle. And being wrong in this market is, for me, I couldn't care less. I couldn't care less if I'm wrong. I just don't really care, and I will not seek a reason behind something if I'm wrong. I will not make up a story of how I saw things wrong. I will just accept my loss, and it is what it is. I just couldn't care less. So always feeling the need to be right, and this is not only in trading, because I know that feeling. I know that feeling of always needing to be right, because I was exactly there. I always felt like I needed to be right. I was so stubborn in some stuff. I was so like just having some kind of thing that's over me, that I always needed to be right. I need to have my saying. I need to be right. And this is not only in trading, because it started outside of my trading. So if you have this problem, if you recognize these problems, then most likely they are not only inside your trading, they are also outside of your trading. So that's something to recognize. And then what I did was I recognized the problem also outside of my trading. And then I fixed the problem by focusing on outside of trading as well. And that automatically fixed my trading. So psychology in trading 9 out of 10 times also relates to your personal life, or how you are experiencing things in real life. Yes, then believing you are unlucky. Now, believing you are unlucky, this comes back to toxic thinking, making up false beliefs, making up stories that are just not true. Believing you are unlucky. If you believe that truly, then you probably are unlucky. Well, of course, we are not unlucky. We just have to know how the market moves, etc. We will take losses. So if you take a loss, don't believe you are unlucky. Now, how can we have some kind of grip over ourselves and think, okay, we are not actually unlucky. This is just a loss. It's okay. Well, we need to have some data. We need to have some data on our trades. So for example, I gather data on my trades. I know there is a certain kind of probability. I know somewhat my win rate. I know somewhat my expectation on how much I will make on a trade, etc. Having this data will help me form the logic that if I do take a loss, I'm not just unlucky. Or especially if you're in drawdown and you have 3 losses in a row, then the win rate that I gather from my data will back me up, as in it will tell me, okay, this is normal, this could happen over a string of 100 trades, etc. And having this by your side, I actually have it on the left of me here. I have this old FTMO, a 50 trade period, and it says exactly how much you can expect to lose or have a losing streak with your win rate. So for example, here I see if I have a 50% win rate, there is a 97% chance that I will get a 6% or 6 trade losing streak within a 50 trade period. So if I know this and I look at it, I can tell to myself when I do encounter a drawdown or a losing streak, I tell myself, all right, it's okay. This is normal. This is not something strange. And this will also prevent us from strat hopping. This will also prevent us from seeking that next holy grail, from seeking another mentorship that will possibly help you even better, etc. And that will humble you. So gathering data, if you're not already doing it, I would suggest it. And you don't have to go backtest. What I do, I don't backtest. I just don't like backtesting. I don't know why. I just hate backtesting. But I like to either go in hindsight back, or I like to forward test mostly. So I just, from now on, I just gather the data. For example, I just don't go back in time. From now on, I'll do live and I'll gather the data live. And I do this at the end of every week. So at the weekly review, I gather my data. Focused on the results and not the process/quality. Now, of course, our end goal, and this is not something we can get around, because obviously everyone is here to have some kind of freedom, some kind of money, etc. And we can all say, no, I'm generally here because I want to trade and it's such a beautiful profession. That might be true, but your end goal, the reason you came into it, is probably because of the freedom and the money. And we're not going to sugarcoat that. And that's also the reason why I was in it for trading. So having that thought is great, but when we are actually trading, we need to focus on actually executing the plan with quality trades and not focusing on the end result, which is eventually it's a byproduct of our quality, of our focusing on the process. Then the money will come. Believe me, if you just focus on the process and stick to the quality, providing the quality, etc., then everything else will come. It will align. Everything you want will sort of manifest itself. And knowing this, that you focus on the process and seeing the results, that's a very powerful thing. And this is where a lot of people go wrong, because they think they should focus on the results. They think they need it now, and they are not seeing the bigger picture. If you focus on the process day by day, you will get everything you want, but it will take time. And if you focus on the results only, you will probably feel like, I need it today, and I feel like it's doable in one day. No. This is not doable in one day. This is not even doable in a month. You are not going to learn how to trade great within a month. I would argue within 3 months, not even. Within 6 months, I would say, all right, you might have a chance to fully grasp everything and be a truly great profitable trader. Within 6 months, I would say, all right, you might have a chance. So again, focusing on the results, and also if you do focus on the results, not having those false expectations and thinking you will be a millionaire in the next summer, that's probably not going to happen. I'm sorry to tell you. Then next thing, because obviously all these things can lead to make you angry, etc. These can all be the first sign of you getting angry. Then the next thing we talked about, focus on the results. Yes, then focus on the process is also building healthy habits. So you might have seen me in the Discord as well say, if you are trading CPI, then that's not something you want to do, in my honest opinion. It's and I'll tell you in the nicest way possible that it's very stupid to do it, because if you are building these healthy habits, if you're building these unhealthy habits on a demo, or even me trying to see how I could have gotten involved in this big spike. Now, obviously, I see this market structure shift. I have this ST right here. So obviously there is an entry possibility. But let's say I also saw this entry. Again, takes me back to the beginning. If you are very unlucky, this would have blown your account and you would have gotten filled right here. And that's not only a bad thing for you financially, that's also even worse for your psychology. Recovering from that for your psychology, if you're truly trading a live account, that's your own money, so not even prop firm, then that's going to hurt a lot. So building healthy habits with everything, building healthy habits in life, not only trading. Remember, we are not only focused on trading right here. Psychology is everything outside of trading as well. You can't have an unhealthy habit of, let's say, we can't have an unhealthy habit of always wanting to be right outside of the market. So not even with trading. So I'm arguing with my brother or with my friends, and I always have the need to be right. Then how can we expect to get into trading and not always feel this need to be right? Obviously, this will transfer into trading as well. So think about it. Think about the bad habits that you have outside of trading and how they affect your trading and how they affect your psychology. Next thing, revenge trading. Aha, revenge trading. That's a great topic. Revenge trading, because I think we've all done it. Surely we've all done it. Surely we've all thought we can make a quick buck with revenge trading. And again, the dangerous thing is that probably, and I've also had this, my revenge trading got rewarded. So I actually made money. And that's the most dangerous thing, because if you do revenge trade, or if you do make a psychology error and you don't acknowledge it, and you don't, if you don't get rewarded, so you actually blow the account, you'll learn something. If you don't blow the account, you don't actually learn something, and you just keep on doing it. And this is why these healthy habits are so dangerous, because if I did actually caught this win right here, then what's next for me? Well, when is the next news event? When can I gamble again? Because this is easy money. So building these healthy habits is very important, and acknowledging the wrong or the right, because if you are building these unhealthy habits in demo or wherever you're doing it, then yeah, it won't end up well, because this is not trading. You only have to be right one time. One time you have to be wrong on this move, on a news spike, on a heavy news spike, and you will blow your account. That's not trading. That's literally gambling. And of course, trading is a little bit gambling, but we have risk management on our side, and we have some math on our side. So that's the difference. Revenge trading, no thinking, just pure impulse. Yeah, exactly. Revenge trading, you're just doing whatever you want to do. There's no thinking at all. Your thinking is basically shut off, and you're just doing without hesitation. You're just angry. Let's say I lost the trade here, and I'm just on the 1 minute now, and I'm thinking I need to make this money back as quick as possible. And then I'm just starting to execute everything. I'm trying to catch this retracement here, just losing, and as you obviously can see, and as you might have done yourself as well, this will just end up in a big disaster and it won't end well. And then the next thing, not every loss will trigger some kind of emotion or will trigger revenge trading. So if you do actually, if you notice that you did revenge trade in recent history, or you over traded in recent history, then I want you to go back and I want you to see the trades that triggered your revenge trading. Because most of the time, over trading or revenge trading is triggered by a trade that was not in line with your trading plan and that was too discretionary. So what do I mean by this? Well, obviously, as you might know by now, my trading plan is fairly simple, entry model, etc. Now, my higher time frame analysis is not fully set in stone. It's not as objective as possible. It is objective as possible, but it's not fully objective, if you know what I'm saying. My entry model is pretty much objective, 99% objective. So if I don't have this objective entry pattern, entry model, and I don't know what I'm looking for, and I'm fully discretionary. Obviously, like I said, with more experience, you can be a little bit more discretionary. This is a slow, gradual process that you'll become more discretionary. But if I'm fully discretionary as a beginner, then most of the time, if the trade is a loss, so let's say this was a fully discretionary trade, I took a loss here, then the next thing is I will likely start revenge trading. Now, why is this? Well, if the first trade is not actually in your trading plan, then the next can also be not in your trading plan. And if you do have an objective entry pattern, then, and you have this data to back you up, then you know, all right, there's some logic here. All right, I just looked at my losing streak data right here. All right, I can probably expect to lose 6 trades in a row. It's not a problem. This is normal. These losses are inevitable. And as you can see, I am now injecting this logic into my mind. And I know, all right, this is normal. Now, if you don't have this data, if you don't have this entry model, if you don't have this entry pattern, and you just enter all over the place, then you don't have something to fall back on. You don't have this data to confirm your belief of that logic. So to confirm that logic, that losses are actually inevitable and that you are going to be okay in the end of things. So having this data as your backup and maybe even print out the data and then put it above your desktop. And every time you do take a loss, you can immediately look up and you see the data and you notice, all right, and you can inject the logic immediately and you can say to yourself, all right, these losses are normal, they are inevitable. Just keep focusing on the quality. I might take the day off. I'm now going to journal, pen and paper. And tomorrow I'll be back and we might catch something, or we might not even catch anything at all, or we might even take a loss. Who knows? It's going to be fine. So very important. Then what's the next thing I wrote down here? Let me take a look. Yeah, so discretionary, revenge trading, etc. Yeah, so the last thing I saw there were no questions. That's okay. I actually, of course, psychology is a little bit more personal. It's not the most fun thing to talk about. I know it's not the most fun thing to talk about, but if I truly wanted, if I didn't want the best for you, I wouldn't talk about psychology. Let's put it that way. I want the best for you. I want you to be a profitable trader, and we can only truly reach that if we talk about psychology. I know it's very boring, but the only thing we can do is talk about psychology. And it's very important to acknowledge that 90% of the people are constantly busy with concepts, with technicals, with new this, new that, new this. goes back to the same thing that I said yesterday. In prop firms, 90% lose money. Well, 90% don't even use a stop loss. So what are we talking about? If you, what I'm trying to say here is trading or making money trading is not actually that difficult, but 90% are not willing to put in the work or putting the boring work. So concepts might be fun, etc., but there's a certain point where you have to stop with looking at new concepts, etc. And that's when it can get boring. Yeah, it can get boring, but the psychology then becomes important. And the psychology is just doing the basic work over and over. And there's not going to be something that I tell you right now that will fix all your psychology problems or will fix all your technical problems. There's just not a video out there that will fix everything for you right now and will make you money. There just isn't, there isn't. But the only thing we can do to outwork the 90% that are losing money is applying every step that I give you systematically, consistently, over and over, and give it some time and you will see profitability. And this is what I wrote down here as well. I purposely don't want to answer technical questions in this Zoom. Now, and that's not to be a dick or something, because obviously I want to always help, but in this Zoom, if we are talking about psychology, and I just told you in the beginning of the Zoom, that can you resist that urge of talking about technicals or looking at a chart or resist that urge to actually trade, then it wouldn't make sense for me to now talk about technicals in a psychology video, because psychology is 90% of the work. Technicals are 10% of the work. So we need to talk about psychology for us to become profitable. Very important. So I purposely don't want to answer technical questions in this Zoom. And then I wrote down, can you go one day without looking at a chart, without that urge to execute? Can you go one day without looking at a chart? Now, for me, I used to be, of course, and this is absolutely normal, but I used to be like, I want to look at a chart. I need to look at a chart. I need to know what it's doing now. I just need to know. And now it's more like a business for me. I just come to the chart, I check it. Is there a trade opportunity for me? No, all right, I'll step away. No, no biggie. Perfect. I don't really care. If there is a trade opportunity, all right, let me think about it. Let me see how I can get involved, etc. I don't have this urge. Trading at a certain point is normal. It's normal when it becomes boring. When it becomes boring, when you don't feel these euphoric thoughts when you win a trade, when you don't get angry when you lose a trade, that's when you actually start to become professional. And when you don't feel this urge to trade in the morning, when you wake up and you feel like, all right, I'm just going to look, but I don't actually have this urge to I don't feel this need to execute. I don't feel this need to stare at a 1 minute chart and execute or force a trade. That's when you start to become a professional. So that's basically it for this Zoom. I'll go over a little bit of the chat right here. Let me take a look. Let me see here. Why did we see that slippage today in DAX? Here some. Yeah, this was CPI. And in 20 minutes, we'll have FOMC as well. So yeah, CPI was a big one. Demo and forward testing, back testing. Yeah, for sure. I always feel like demo and forward testing is way better, because back testing as well, there goes so much into back testing. Like for me to have a proper back testing session, I need to prepare for 1 hour to find my higher time frame, draw liquidity. I need to do this exactly the same, and it's just difficult for me. And of course, backtesting might be great for you. And I use backtesting to test some things and to test my entry model, for example. So that's great to do, but to actually backtest my full strategy, it's difficult for me. But if it works for you, that's great, of course. Very important to create bad habits. Yeah, backtesting as well for me, and especially that's just personal to me. Backtesting, I skip through it. In backtesting, I just don't have the patience to wait and sit there and just to look at a chart. I just skip through it. I just keep clicking the button like this and etc. You get it, I think. Or it can be, yeah, backtesting helped me a lot to gain confidence. Yeah, for sure. Backtesting can also help to create confidence and to know exactly what you're looking for. So for your entry model, backtesting can help a lot. Yeah, for sure, for sure. As I'm not here to discourage you from backtesting, by the way. If you truly benefit from backtesting, then yeah, go for it. It's perfect. Yes, same. Perfect, perfect. But it was more a TA in hindsight than backtest mode. Yeah, I also like to do that. Just look at technical analysis in hindsight. Replay backtesting helps back the data. Yeah, for sure. True, true, true. Get confidence from the data, etc. Yeah. Yeah. What I also noticed, I created before I was actually profitable. I used to trade demo, and I thought I was doing a great job trading demo, but I was just making these bad habits for myself. So I would just enter randomly, or enter a little bit early, or enter a little bit late, and not because I actually missed the trade, or I knew what I was doing. No, I was just deliberately, I was on purpose entering early because I thought I would miss the move, etc. I was just not sticking to my plan. And when I did put some money on the line, not financial advice here, so don't quote me, but when I did start a challenge or something, that's when I did have some emotion involved. So I would be more, how do you call it? I would be more aware of the habits that I was forming, etc. Most of them regarding patience. Yeah, I'm trading my as a real account. Yeah, Maddie, if you can do that, that's great. You're already better than me. But yeah, I just can't do it for myself. So yeah, demo is for sure a perfect way to learn, and it's a very personal thing as well. Yeah, for sure. But of course, in backtesting, you can get a yeah, exactly. Yeah, exactly. Yeah, and of course, to each their pros and cons, and of course, it's a personal thing as well. So what might work for me might not work for you, etc. It's just personal. Yeah. So don't take everything I say here as a holy grail. Like I say very often, don't let my words be your holy grail. No, your holy grail is your holy grail. You are you can be a way better trader than I am. Don't worry, you can be a way better trader than ICT. You can be as great as you imagine if you just stick to your own logic and your own intuition, etc. And don't take other words as a holy grail. So yeah, what works for you, do you for sure. If I keep seeing my model daily, can I keep trading every day? Yeah, for sure, for sure, for sure. Yeah, just like I said now, just if you do see your model generally every day, then yeah, for sure, go for it. Go trade every day. Then that's great. That's a great opportunity to filter out bad days. Then there might be a low probability day inside those everyday trades. So you might now want to filter or gather data on low probability conditions or high probability conditions. So if you do see your trading model every day, gather some data and look at the days where you lose. I just said I don't want to talk about technicals, but yeah, I'll finish this right here. So gather some data and look at the days where you do take a loss and what happened on that day. Why is it that you might have taken a loss? And then look at other losing days as well. And you might see some recognition. So you might say, there's some kind of the same events happened on the day. The same news events happened on the day. Or the same things happened before that day. So I slept probably, maybe I slept really bad. That's a low probability condition day for me. If I sleep very bad, then that's a low probability condition day for me. And not even on the technical side, but for me, I just can't focus. I will be impulsive, etc. But yeah, no worries. Don't let my words, like I said, don't take my words as a holy grail. If you do see your model generally every day, then that's perfect. Just keep studying, keep focusing on it for sure. I have problem with putting appropriate SL and make it too wide as I'm scared of being stopped out. As I am scared of being stopped out when I feel confident at the same time that my trade should go well based on higher time frame analysis plus the execution. Ooh, all right. That's a great question. That's a great question. Let me think of how I can answer this problem properly. I have a problem with putting appropriate SL and make it too wide, as I'm scared of being stopped out when I feel confident at the same time that my trade should go. Well, I will make some suggestions right now. You don't have to answer them in the Zoom because this can be very personal, but I will make some suggestions and see if you can deal with that. And then you can message me in the Discord, etc. And we'll go over it even more. If you do feel like you're afraid, because this is a little bit of a fear, right? There's some kind of fear here. There's some kind of fear, either of fear of being wrong, a fear of losing money, maybe if you're trading real money. I don't know. I think you just said you're trading on demo right now. But if you do trade live money, then that might be a fear of losing money. If you don't trade live money, that might be a fear of being wrong. So why is it that you fear being wrong? Do you fear being wrong generally outside of trading as well? And what we can do right here is we can use the data collection worksheet. So whenever you feel this coming up, you can go back and look at this pattern and how we could have prevented this pattern from coming up. So we can inject some logic. Then we can fill in the fear profile, and we can see the pattern, etc., and we can work on it. Now, the thing, most people right here, when you do tell them this, they will tell you, just reduce your risk. Just do this, and it will go away. Now, while I do agree with it somewhat to reduce your risk if you feel like it's too high, and especially if you're a little bit of a beginner, then I would recommend it. But generally, reducing risk is only a quick fix, and it's not a fix for the long term, because we need to prevent this emotion from even coming up. So having that quick fix will not fix our long-term problems. So again, filling the profile and beautiful, Joseph. Filling in the profile, etc., and getting to know your problem, the root of your problem, and seeing your pattern. That's very important. So for this, I would probably think somewhere the fear of being wrong, and there's somewhere there a problem, I would say. For backtesting, did you get extended history chart from somewhere? Are some symbols on TV for ES giving more history? Yes. Oh yeah, great question as well. So if you do want to backtest more, you can fill in the contract right here, an old contract, ESZ 2022, for example, and just click enter. Wait, I'll do it again. I'll show it again. So let's say grab an old contract, ESU 2019. This is an old contract name. Then we click enter. It won't show any symbols here, but we click enter, and this works for any future contract. Click enter, and it will take you there, and you can go backtest this if you do want to. Now, obviously, if you do go far enough back, there will not be enough data. This is just something TradingView has. Unfortunately, this is something TradingView has, and will likely or hopefully will fix it in the future. That would be great, where you can just buy some data packages. Now, there are some softwares, I believe soft for FX. So that's soft for FX. I believe it's called like that. And these have data packages from years back. So I'm talking about 60 years back, etc. And you can download these, and you can go into MetaTrader, and then you can backtest through MetaTrader. Now, MetaTrader, as you might know, is an absolute pain in the ass to backtest or to even normally trade. So that's not very nice to do. But and the last thing I can suggest, if you do notice the data is running out. So for example, here in the 1 minute, just because this has the least bars, and you feel like you need to go a little bit more back. So let me take a look. Where does this data end? All right, the data ends here. Then if you place your replay tool right here, it will still show you more data. So this is also a quick little tip to get more data. And that's basically it. That's basically it. But for TradingView right now, there isn't an option, I believe, to get more data. Look at, oh yeah, FX replay. That's way better than soft 4FX. So if you do want to look at all data, use FX replay for sure. I think, yeah, all right. Use FX replay. Yeah. 2016 data. Yeah, exactly. Awesome. Thank you guys. You can also test ES and yeah, perfect. FX replay, you can split between 4 people and split price. Yeah, for sure. Great. So, all right, perfect. Thank you all. Thank you all for being here. If you do have more questions about psychology, etc., or if you do encounter some problems during your trading or etc., you can journal it. But you remember, I'm here for you. You can always hit me up with a message and just say to me, I felt like I was getting angry during my trading, etc. We can always take a look together. So please remember that I'm always here to help. So thank you guys. Great Zoom in my opinion. And I'll see you at the next one. Have a great evening. Have a great day, whatever your time zone is. And let's absolutely smash it this rest of the week. Thank you all. Bye-bye. Let me see. How do I stop this? All right, but it doesn't let me stop it. Yes. All right. Bye-bye.